How do you know when you're done researching and you know everything you need to know in order to invest in a stock? Now, that is actually a tricky question to answer because you could always just do more research, but there is a bit of an 80-20 rule where the more research you do, you are not necessarily earning more sort of insights, and maybe your time would be better spent elsewhere. Now, for those that don't know, I also run Speedwell Research, which is an investment research company that produces long term equity research for hedge funds, asset managers, and other investors. One of the things I'm always looking at when I'm doing my research is at what point do I feel confident enough that I could actually publish this report, that I don't feel like I missed some sort of key aspects of information. And it's tricky because sometimes information can come late in the research process that can be pretty critical to understanding the business. And other times you kind of understand the business in the first couple hours, and all the other research process is just there to make sure you didn't miss anything. When I researched Floor and Decor, it was very similar to that. They sell hard surface flooring in warehouses, and they have the most selection, the cheapest prices, the best service, and the most important, the most in stock inventory. And so for that business, those were kind of the key factors to understanding it. You can understand that, they currently had 200 some stores and they want to get to 500. Each store at maturity, they're hoping will do 25 to 30 million in revenue, and they think they'll be able to have 15% mature margins. Okay, that's kind of a pretty clean and easy story to understand. And you could just go ahead and multiply those numbers and you could get an earnings figure, throw a multiple on that and discount that back to today, or you could do the full DCF, which we do that too. And so either way, it's a pretty straightforward business to sort of learn. Other businesses can be much harder. Businesses like CoStar, which is an amalgamation of a ton of different businesses, but they really have at least two really big ones, apartments.com, which you may have heard of, and then CoStar, which is kind of like a Bloomberg terminal, but for the real estate industry. And so it's a lot of really hard to gather data that they sell to various real estate professionals. And, getting access to one of those terminals, thousands and thousands of dollars a year. And so when you're dealing with a company like that, it's trickier because it is B2B. And so you have to do a lot of understanding from people in the industry, how they feel about the product, the alternatives. And that's a harder thing to do than when you're looking at a consumer company where you yourself can kind of have some opinion on it. But just generally figuring out what consumers think about a product is kind of easier to do. You have a lot of reviews. You could just walk in the store. You could kind of see the activity. You could ask customers questions. And so it's a pretty straightforward process, whereas it's a little harder to find, real estate professionals that use CoStar in their day-to-day work. There's plenty of them and they're out there. It's just a little harder to find that and find people that'll give you their time and they're going to openly want to talk about it. And so it does become a trickier part of the research process, but it is still very important to do. And very often when you're doing that, you're kind of just confirming things you probably already thought. I already, before ever talking to any real estate professionals or reading any expert call transcripts, understood that this was a product that was very hard to replace because the data that they've been able to gather over the past 40 years required a lot of manual entry. It's aggregating all of these different local databases. It's having all these brokers manually input information into there. And then there's a bit of a network effect where they know other brokers are looking at it, so they want to keep their own data accurate. And so it's a very tricky thing to replicate. And I knew all that beforehand, and I knew they certainly had pricing power because they talked about it. They talked about how during the financial crisis, they basically didn't see any material churn at all of any company that has been on the platform for more than 5 years. And so there's really a lot of reasons to believe that it was a very good sticky product, but you need to confirm that because you can't just take the company's word for it. And so a lot of research involved just confirming that. And so it may feel kind of like a little bit of wasted time because, we finished that research process and then we just said, yeah, basically we thought a similar thing. Okay, their customers hate them a little bit more than maybe we thought prior, but it didn't really change our understanding of that product. And so there's a lot of research that just kind of feels like that. It's just kind of confirming things you already had a suspicion of, but it's no less important to do because sometimes you'll find out you were wrong. And that's really important too. This was, several years ago, but I was looking at Alibaba and a lot of people would kind of talk about them as being this dominant e-commerce platform in China. And, they have over, I think it was 12 million sellers at the time. They're the biggest by GMV and all sorts of things going for them. Forget all the other businesses. Just the e-commerce platform alone, people thought they would be very impenetrable for a very long period of time. But if you talk to people that in China, you would find out they were actually actually pretty indifferent between ordering on Taobao and Pinduoduo and to a certain extent JD.com, and they actually kind of do all of them. And that we wouldn't know that as people that are in the United States or even Europe, because we just go to Amazon, and Amazon's the only player there. If you're in South America, it's probably similar for Mercado Libre. And so because of that, you're kind of taking this analogy and this idea and you're kind of transposing it onto a different market, a different business. And so then when you go through the research process and you're verifying whether or not that's true, and you figure out it's not true, that is a critical insight to gather. And so at what point do you feel like you've really done enough research? It's usually at the point that you kind of are not learning anything new, and it's kind of been that way for a long time. There's certain things, channel checks you just need to do. You should always talk to some customers or end users, whether it's consumer or business. That is one of the most important things you always must do. Very often, you're probably not finding anything terribly new if you diligence the business a lot before. But when you do find out something new, it is so important. And so that's why you have to do that. I will also say, though, in regards to Alibaba, when I did do research on them, I missed something, and it didn't come up actually until I started researching JD.com. And to be honest, I would have totally missed this if I didn't research JD.com, because it wasn't until I went way back in the history of JD.com, I believe it was 2015, that I noticed they changed their definition of GMV. And when they changed that definition of GMV, that also kind of shed light on how Alibaba was calculating GMV. And GMV is just gross merchandise value, the value of everything they claim to sell on their platform. I use the word claim because it turns out that a lot of products will be purchased and then returned in order to boost activity on the platform. So the merchants get ranked higher, but it's not real commerce activity. And so when that definition changed in JD, I was able to apply the same sort of methodology that JD used to Alibaba, and that implied their GMV was about half of what the stated was, of real actual transactions that had economic value, so getting rid of all the returns. And so that's a big difference, because then that also implies that their commission rate, or the rate that they monetize, their take rate, people use all these words kind of synonymously, was much higher. And so that meant it was much more expensive to sell on their platform than alternatives. And then that also means there's much more of a door for the competitor Pinduoduo to come in. And so all of those kind of things together are very important things. Didn't come up until very late in the research process of actually researching a competitor. And so you could maybe say I should have been more diligent earlier on and caught that, but I didn't. So you do sometimes have these, for lack of a better word, bombs that you find in your research, and it could not come till much later. And so I know I started this video off saying, how do you know when you're done researching? Well, you should probably be at the point where you're pretty bored for a pretty long period of time. You feel like you covered a lot of the basic bases of having gone through not just all their financials, but it's helpful if you go through competitors' financials. Competitors sometimes will be open if someone else is doing a little bit of shady activity. This even happened a little bit with Floor & Decor when we were researching them, because they had a competitor called Lumber Liquidators, and they actually ended up on a live 60-minute segment when the CEO was asked the question whether or not their product passed formaldehyde inspections and had the proper certification. And then they just cut to a video actually in the 60-minute segment of a factory worker saying, no, we're not formaldehyde compliant. This is just a sticker we put on. So a competitor might be more open to poking at the sort of unsavory business practices of someone else. And so that is something that even in CoStar Group, they very commonly pointed out to Xceligent, who they ended up suing about some of their business practices with copywriting a lot of their pictures, and they ended up going bankrupt. And so if you're looking at CoStar and researching them, you would have found that out. And so anyway, that is a very long-winded way of saying that you're kind of never done with your research process, but at some point you will build enough confidence that it seems it's very unlikely you're going to find out something new. Of course, it's always possible, but you've kind of done enough research. You've kind of covered all the basics. You've done the financials, your customer calls, your channel checks. And at that point, you feel confident, and you can, at that point, make a decision whether or not you want to invest. But you should always keep researching thereafter and kind of keep an eye out, not just for new developments, but just in case you miss something. Because even if you miss something, it's pretty often that people are not paying that much attention to it. And so if you are paying attention to it and maybe another investor or analyst, pointed at it, you might have an opportunity to kind of research it more thoroughly before the broader market actually finds out about that. And so I hope you enjoyed this video. If you want to understand, though, the basics of where to begin with researching a stock, go ahead and check out this video here. And if you have any questions at all, though, go ahead and drop them in the comments below. And anything else you kind of feel like I missed or should have covered better, you could comment on as well. well. And if you found any value in this video, go ahead and hit like and subscribe. Thank you, and until next time.